Hey, what's up, guys? Brad here. So it is Friday, which means we have our weekly top 10 stocks that Robinhood investors are buying June 2020. So this is the top stocks over the last week that Robinhood investors are buying. So let's jump right into it. We've got Nikola Motors, okay? Electric truck maker that's trying to compete with Tesla. And I actually made a video about that a couple days ago, so check that out. It's getting a lot of traction. People seem to like that one. The second one, Hertz rental car company. Okay, now this company filed for bankruptcy. The stock went down to 56 cents a couple weeks ago. Now there's speculation that it's going to get bailed out. So the price popped. And yesterday I actually put out a video on Hertz. So check that one out if you're thinking about buying Hertz. Here we've got a crude oil tanker transportation company. Very small, under 50 million market cap. That might be a play on, because the barrels of oil are so low. They need to be stored. This might be a play on oil storage. I'm not quite sure. Number 4, we've got American Airlines. And there's another airlines on here too, Delta Airlines. People love airlines recently, guys. I'm not quite sure why that is. I know the price of the airlines has gone down quite a bit. I mean, you look at American, it's dropped almost, actually more than 2/3 since its high earlier in 2020. And then, of course, you got Delta that's just over 2/3 down as well this year from its high to low. You guys, I don't understand though why people are so. It's like people need to figure out what they want to do with airlines. Which airline should I buy? Airlines has become this hot sector of the stock market, and I really don't understand it. From my perspective, airlines are going to be impaired for 2 to 5 years, I would say. Like if airlines aren't filling that middle seat, if airlines aren't at full capacity, they're not making money. The profit margins are so thin. And who's going to be wanting to sit in a middle seat sandwiched between two other strangers until we have a vaccine, until we have some kind of resolution from what's happening in the world right now? There's just no visibility in terms of when airlines will be profitable again. So, people ask me, oh, is it a good time to get back into the airlines? First of all, I've never really been interested in the airlines. I mean, even you look at Warren Buffett, what percentage of his portfolio was in airlines? Obviously, he had all 4 big airlines in the US, but they were fairly far down the list from what I can recall. And when you get that big, when you're managing hundreds of billions of dollars, you've got to do things that aren't necessarily super compelling just so you can find a place to invest that money. So honestly, I've never been a huge fan of airlines, particularly now. I'm definitely not a fan of airlines. Number 5 on the list, we have a mortgage REIT, a mortgage real estate investment trust. Now, you guys, mortgages are having a really hard time, which explains, why this company dropped like 90% in 2020. Now, this column here, really important column, Value Investors Club. Okay. Now, this company has a write-up in the Value Investors Club. I highly recommend you check it out. It's a free resource. You just sign up with your email, and then you can look at investment ideas that some great investors have submitted, and they've been vetted, and they've been identified as great write-ups of a company, really thoughtful write-ups for compelling investment ideas. And you can go to Value Investors Club and search for a ticker. And I found a write-up from April 2020, just 2 months ago. This was actually for preferred A shares. of this company, IVR, which are not available through Robinhood. Okay, so make sure you understand that distinction. This is not saying that this ticker symbol, straight up IVR, is recommended. It was the preferred A shares. And if you look at that write-up, you can see the preferred A shares got down to $4.70. That's what they were at when this investor submitted this write-up. And as of today, they've jumped up to $22. So that's like a 4 or 5x in a month or two, which is amazing. But keep that in mind. This is not for the version that the form of stock that you can get on Robinhood. A lot of people might be drawn to this because of the dividend yield, almost 33% right now. But keep in mind, these dividends get paid out every quarter. So it's not like that's the dividend that was recently paid out, a 33% equivalent dividend. So it'll be interesting to see, whether the next dividend gets paid out, whether the one after that gets paid out. Because, if you look at this write-up, this company is in trouble, okay? The preferred shares, have a much better chance. But these common shares, mortgage REITs are probably going to have a very hard time considering what's happening in the economy, considering how many people are losing jobs. So be very cautious with this one. Make sure you understand. Just read this write-up in Value Investors Club. That will get you a very long way. We've got OAS, an oil and gas fracking company in Texas, oil and gas production. Now, you guys, personally, I wouldn't want to be invested in any company that's producing oil and gas, considering what's happening in that market, how prices have just tanked. The share price, look at the share price, it's gone down an insane amount. What is that, like 93% or something insane. So that's interesting just because of how much it's dropped. But it's back up at $1. That's still quite a discount, but when you're in a situation where the future of a market like oil is, there's just so much uncertainty. We don't have to make bets on companies like that. There are plenty of other companies where we have a reasonable amount of ability to predict what's going to happen in the future. That, betting on a company like this, I don't know, it just seems like a big gamble. And I'm not a fan of gambling with my money. I prefer investing. So not super interested in this one. GUSH. So I actually pulled kind of a description about what GUSH is. It's essentially a leveraged ETF. Provides 2 times daily exposure to an equal weighted index of the largest oil and largest gas exploration and production companies in the U.S. Like I said with the previous one, OAS, I'm not crazy about being in the space of an oil production company based on kind of the oversupply right now. But let's dig into this a little bit more. GUSH seeks to deliver 200% of the daily performance of the S&P oil and gas index. Uses over-the-counter derivatives to achieve that objective. Should not be expected to deliver 2 times the performance for periods longer than 1 day. So this GUSH ETF is really designed to be a day trading type instrument, not a buy and hold. Compounding and path dependency can cause significant deviations over longer time frames. Best used for single day tactical plays. One thing also I thought was interesting, well, this is interesting. GUSH exhibits a serious small cap tilt because it's an equal weighted index. So, say there's a really big oil company in the fund and a very small one, it's going to have the same percentage of both of those companies. So as compared to a market cap weighted, it's going to have this small cap tilt. It's going to be much more kind of tipped towards the small cap end. This last one is really interesting. Prior to March 31st, the fund provided 3x daily performance return. So that's very curious to me. It was a 3x leveraged fund, and then come March 31st, it becomes a 2x leveraged fund. That's really interesting. I'm very curious about that. And does that mean they can just change the leverage ratio whenever they want? I don't quite understand that. And you see the expense ratio here of 117 basis points, as compared to, like an S&P 500 index, which you can get as low as 4 basis points. So, obviously you're not going to be buying and holding this in all likelihood. If you were buying and holding, that would be a very significant expense ratio. But just wanted to dive into that one a little bit. I thought it was interesting. Like the 52-week high on this one is over $3,000, and it dropped down to $1,350 recently. So, I don't know, kind of interesting. Ship, dry bulk commodity tanker transportation company. So, again, very small, kind of like tops. I have no insights into this one at all. It is very interesting that it's showing up here. I'm wondering what's leading Robinhood investors to be interested in this particular company. We got LK, Luckin Coffee. So that's a Chinese coffee chain. I guess there was a scandal that happened which caused this stock price to go from 50 down to 139 not too long ago. It seems like this coffee chain is very kind of tech geared. I guess you can use your iPhone or use your smartphone with an app to order the coffee, and that's kind of interesting. I wonder how that impacts costs for the company. It might have a dramatic reduction in operating costs. Maybe they don't need as many employees, and it's kind of an interesting company. It is owned by one super investor. And I don't think I've talked about the super investors yet in this video. So if you go to dataroma.com, you can see what the best investors in the world are buying and selling. Basically what they bought and sold in the last quarter and what they're currently holding in their portfolios. And so there's one super investor who owns Luckin Coffee. I think he actually bought it in the first quarter of 2020. So, yeah, this is kind of interesting. I could see digging into this one more if I was, trying to find investment ideas. This is really the only one on the list of any of these companies that I would have any interest in digging deeper into. And then we've got Delta Airlines, of course, and I've already talked about the airlines. Now this earning yield is excellent, but as I've said in other videos, the earnings figure that's making up this earnings yield is based on a previous quarter. Okay, previous quarter results. What the company is earning now, or has been really since the shelter-in-place order, since most of the country has been staying home and not flying, is not built into this earnings yield. And I just want to mention as well, these are two metrics that are used in the Magic Formula investing strategy by Joel Greenblatt. Earnings yield, which is a measure of how cheap a business is, and return on invested capital, which is a measure of how good a business is. And so when you combine these two scores, that's a great way to kind of screen companies to find interesting investment opportunities. Not very compelling numbers in any of these. Usually when it says not available, it means the company isn't earning money yet. Okay, it's a startup. It's still, losing money every year as it's kind of in the early stages of growth. I want to mention Nikola. I don't think I mentioned in this video. A couple months ago, it was valued, for the IPO reverse merger situation, it was valued at around $3.3 billion. Okay, Nikola was. It's just skyrocketed in the last, particularly in the last week. I think the NKLA ticker has only been available in the last week. So it's just insane, guys. Check out my video on Nikola if you're interested in that one. And I think that's all I got, guys. So those are the 10 companies Robinhood investors, Robinhood speculators have been buying in the last week. Not too much of interest for me personally here. I mentioned Luckin Coffee. That's kind of interesting. Really the only thing that's interesting. So let me know if you guys are buying any of these, or if you're kind of watching any of these. I'd be curious to hear from you in the comments. If you like this kind of Friday Robinhood stock roundup that I do, please smash that thumbs up button. Hit that subscribe button if you want to see more videos like this in the future. And that's all I got, guys. Have a great day. Stay safe out there, and I'll see you in the next one. Take care.